Concerning the high probability strategy, I spoke about using the the basic dual time frame momentum strategy, where I spoke about selecting a higher time frame. In my opinion, I go for H1, and then I select M15 as the lower time frame, skipping the middle time frame. So whatever time frame you select as your higher time frame, skip the middle time frame or the time frame after it, and go to the one after the next one you skip. So M1, M15, M5, M13, and so on and so forth. Yeah, I can't go into all that. If you miss it, kindly watch the video. Yes, so we talked about using the stochastic, where we spoke about the fast line crossing the slow line and all that. If you miss it, kindly watch it. Then at this point in time, we'll add a second indicator to give us the confidence, to give us the assurance that whatever decision we are taking, the other oscillator confirms that decision, and it's more of a go ahead for you to enter the trade, because the objective, the whole aim is to be able to enter early in the market, not to enter late, as most of us sometimes do. You see a trend, but it's too late to enter. So this second one is going to help us confirm. Right, so let's get to it. I'm Danny Legend, and welcome as always to Boom and Crash Expert Advisor. What you need to know is the MACD measures the difference between two moving averages, two exponential moving averages, and it's usually displayed in the indicator window as vertical histogram. So most of us actually just go to insert indicators, oscillators, MACD, and we have settings for it, and we just click OK. But we do not really know what is going on with the MACD, what is going on behind the scenes. First of all, we have 8 as a fast exponential EMA, exponential moving average, and then the slow EMA, which is 13. Then we have our simple moving average, which is 8, MACD SMA. Apply to close, maintain colors, or you can change or use your own preferred colors. Then one of the difference between the stochastic and the MACD is that the MACD doesn't have overbought and oversold levels. All right, so we go with this, we click OK. This is what we have. So 8 fast EMA, 13 slow EMA. But what we don't see is what is going on behind the scene, because we're talking about momentum, right? The loss of momentum and the gaining of momentum and all that. So what is actually going on behind the scene is that there are two exponential moving averages moving to tell us the loss of momentum. And the way we find that out is by going to insert indicators, oscillators. Since RSI is 1, we don't even need these things. Let me just delete these things. I have an empty space. Then I come here under indicators, under trend, I expand it, and I look for my moving average, and I drag and drop it onto the RSI, and I set 13, which is the slow exponential moving average, and then I drag it again onto my RSI window, and I set 8 as my fast EMA. The secret is, or the interpretation is, that this bar, which is shorter than this, you see, every bar from here was getting longer. But immediately you get here, this bar becomes shorter than the previous one. At that point, it represents a narrowing spread or a narrowing range between the two EMAs, and also signifies a loss of momentum. So at this point, you see that the two EMAs that were in the MACD, the 8 and the 13 that were here, that we fixed there, that we didn't know what it was, when you come here, you see them here, 8 and you see 13, but there's a gap between 8 and 13. You see it's widening and closing, but here it comes together. So at this point where it touches one another, it's signaling that the range has reduced and there's a loss of momentum. So it's confirming that the momentum has actually reduced. So it's not just stochastic telling us that there's going to be a turn in the momentum. MACD is telling us that yes, it's true, momentum has reduced because the two EMAs have touched. Does it make sense? So the same thing, as we go, you realize that is widening, but it gets to a point. What happens? It touches, because this bar is shorter than this, and it's also below the signal line. When we come to our current one, which I didn't talk about, is above the signal line, and they have touched one another. Above signal line, touched one another. All right, so it signifies a loss of momentum. So whereas I spoke about the buy and sell signals on the MACD, when I spoke about the 5 best indicators for trading boom and crash, when I mentioned that, there's a buy signal, when you see the red signal line crossing below the blue main lines, when there's a gap here, is a buy. That's what I said on the other one. Also, when you see this bar shorter than the previous one, and you see it above the signal line, what it represents is a momentum, or a bullish momentum reversal. That occurs when a bar below the center line, this is the center line, this is the center line, this is the center line. If I take it off, you see 0 here. That's the center line. Let me place it there. Well, I want to get it on point, so I'll type 0 here, and it will fall on 0. So if I see the bars below my center line, which is 0, and is shorter, this one is shorter than the previous, and is above the signal line, which is the red, it stands for what? It stands for a bullish momentum reversal. And if I see the candle shorter than, you see, the MACD also tells us, whereas the stochastic is telling us we can enter, the MACD is telling us that this is not strong enough of a bearish momentum reversal. So although there's some kind of crossing here, even here there's a crossing, here there's a crossing below, but you see MACD is telling us that wait, don't enter yet, because the shorter bar, which is shorter than the previous, is not below the signal line. So at this point is where we get a better confirmation. It's on this candle that we get a better confirmation. Then eventually we hit our TP. So MACD is giving us the further confirmation that although there is some sort of reversal here, a crossing here, this one is shorter than the previous, but it's not below the signal line, so it's not strong enough for us to enter, even though you can enter and make profit. But if you want to strictly get solid entry points, you also want to confirm with the MACD, right? But that being said, you can still trade only with the stochastic and you make profit. Okay, so at this point you have a strong, I'll close this. At this point you have a strong confirmation of a bullish reversal, because the bar is shorter than the previous and is also above the signal line, and you see that on the stochastic, and you see that here when the two moving averages converge or they touch one another. So that's just about it, adding MACD to your trading system. Right, I hope you found this valuable. Like the video then and share with your friends. Thank you so much for watching, and bye.